Just giving a few minutes here, guys, for anybody to log in. I know this is not the ideal time to do a live stream. I think most everybody in our group is usually asleep around this time or just getting up or something. Screw it, I'm gonna go ahead and we're just gonna go ahead and get started. I got a puppy sleeping underneath me, so I want to try to get this knocked out before he wakes up, and I gotta tend to him. One of our other dogs bit him on the nose, and he's just a little 6-week-old puppy, so he's got some teeth marks in his little puppy nose now, so that was scary. But he's sleeping right now, so I got time to get this knocked out before I got to wake him up and let him go outside or whatever. Okay, so let's take a look at Bitcoin here. Bitcoin has pretty well been spot on what we've been looking at and looking for. We still are missing this little dip down here to 8,200 like we had planned or had charted. I think this was down just a little bit more. But so far, the overall narrative of now entering a chop zone is pretty well right on track. Let's look like we got a little rejection right here, just shy of our first target up there of about 9,100 somewhere. We get topped out almost at 9 grand, 9,000 there. Hey Rob, what's going on, man? So we do got this little bull cross here on the MACD. However, I found that Bitcoin is much, much harder to chart as far as cross-ups and crossovers and whatever than altcoins. Because, I mean, this could be bull here, which could signal a trend reversal, but we can also very well just sit here and chop in this range over the next few days or the next week even. Just to give this little bit of a reset before dumping over. So we're pretty well overall on track with what we need to see, what we want to look at here. So we need to zoom out to some higher time frames. I'm going to use the Bitstamp chart here because it kind of captures that bigger overall picture that I was talking about. So this is what this is kind of scary, to be honest, guys, and it's scary now because altcoins are actually following Bitcoin. So if Bitcoin is going up, altcoins go up with it. Now if Bitcoin goes down, alts are going down with it, which is kind of opposite of what we saw last year. If we got Bitcoin dips, alts would kind of get a push, and if Bitcoin pumped, then alts would drop. Now it seems to be flipping. So we need a fairly at least stable Bitcoin. We don't want, I honestly don't want it to drop now, but this does look pretty nasty on a macro level. I don't care what Twitter says. We are consistently, here's up here at that 20K mark from December, and we have consistently made lower highs on this macro level, each with respect to this trend line ever since. I hadn't seen too many people actually talk about that. Everybody is concerned with putting in higher lows. Now, in some regards, yeah, I guess you could argue, okay, this is a low and this is a higher low, but to be honest, with the way that we rejected right here off of this trend line, this bounce right here looks more like a dead cat bounce to me. It does not look all that bullish. I mean, especially look down here at our RSI. We got 1, 2, 3 touches down here on our RSI trend line there. However, we did manage to kind of get this little bounce, this little kickback up off of this RSI. I could probably bring that down just a little bit to make it match a little bit better. That's a little bit, there we go. However, we are respecting this trend line, this support, because we're just now bouncing the RSI here. We bounced here and we bounced there and we got some more here. So this is a historical support for the RSI. So if we drop below this point, looks like it's at 46. If we drop below that, yeah, Bitcoin is fooked. Now, if we look at the MACD, this is what's also scary. Look at that MACD getting ready to go back under. That is a very weak histogram. So this could be a, like I said, a dead cat bounce, just a short-term little pop right here on Bitcoin, and then we could very well see lower. Now, the last time I had posted a bearish MACD cross under or whatever was, again, up here when we were rejecting from that 13.2 mark. Somewhere up here, and of course I got, you know, trolled on Twitter because of it or whatever. I'm like, all right, well, that's y'all's funeral. And then, you know, just, I mean, you can see it over the course of the next few months. We did actually come back down, you know, halfway between that 12,000, 13,000 mark, all the way down to a low of 63. So now we look to be entering that same phase. Now, however, this MACD is not overextended, because you can see the distance here of the MACD lines from our histogram, and we're hugging it a little bit closer here. So this could be just a quick low reset. So we may not actually reach all the way down to this 4,000 or this 5,000 level. However, this trend line, I mean, yeah, this trend line rejection would kind of say otherwise. But on this level, the key support here, for me to be convinced that this is actually a higher low, I'm going to get rid of this and this and this, because I need to do this. So for me to be convinced, because this is what Twitter is looking at right here. Everybody is looking at this as a low and then a higher low. Like trend lines, like divergences, me personally, I don't count one higher low as a high-low structure. Okay, because, I mean, again, because this very well could have been a dead cat bounce from this push right here, because we've only corrected from that 3K to 14K mark. What the hell is my fib? Where's my fib tool, please? Why am I having a moment here? There, oh, duh, there it is. Okay, so from that 14K push all the way back down to that bottom, we've really only retraced. We did retrace into the golden pocket there between the 0.618 and the 0.78 fib to test right here on top of that 6K support that we broke down from last year. So that would be a plausible and a good place to bounce from. But again, we did reject off that trend line again. So to me, this kind of looks like a dead cat bounce. So for me to get bullish or to consider being bull, we'd have to make another higher low right here somewhere and hold above that 7,700 mark and make another higher low right about there somewhere, going into halving. Now again, I don't like how close those higher lows are, but technically that is valid. So if we can hold over this support right here at 7,700, which I think we are very well on our way to test it, I could be convinced that we'll break this trend line and we'll start a new bull trend. The flip side to that, of course, is let's say that this is a dead cat bounce, and this is just a relief bounce, I guess you can say, from that 3K to 14K March pump, and then now we're just going to snake it down, and we'd end up making a higher low there. I'd be a little bit more convinced of a higher low down here than I would up here. I mean, it may not be that deep either. I mean, it could be just a little bit higher, you know, up here at 5,800 or so. I could still be convinced there. But that gap, in between that gap right there, that's kind of hard to convince me of a higher low structure. So to me, this kind of really looks like a dead cat bounce. And couple that with that MACD going under too. So it really depends there on what that MACD is going to do. Now the other thing that could make a bullish case. God, you know what? That just looks weaker and weaker. Okay, so let's look at this bullish case here. The bulls did hold us right here as support, right there above our 20-day moving average. So it's kind of hard without even piercing that. We didn't even get a wick below hardly, just that one little tiny one there. But without getting a wick below that 20-day moving average, it's also, to that extent, hard to say that, you know, this could drop and curl back under. However, these moving averages do look weak coupled with that high-low situation there. So let's zoom out and see what higher time frames look like. Ugh. Okay, so the 2-week didn't look bad. 2-week kind of painted a different picture. 2-week looked like it could pop. Here's our 3-week. We're respecting that RSI on the 3-week. We've got that little bitty kickback down right there on that MACD. And look at that 7-day moving average. So this, let's see, this is on the 17th. So we still have, let me see here. 1, 2... Okay, so by this coming up weekend, the bulls need to do some work on this candle right here, because if it closes back anywhere around like 85, 8,600, this is going to be considered a, let me turn that off. This would be considered a bearish engulfing candle, as it engulfs and that the entire previous candle could be equal to. So these candles could be the same size, and this would have to close down here equal with the bottom of the that green candle there at about 8,600, and that would be a bearish engulfing candle, and that would be quite bearish, and might put that nail in the coffin there for the bulls. Monthly looks like it doesn't know what it wants to do. Is that red? That is red. That is a red monthly histogram. So the bulls better hope that that does not get any more redder. So again, look at our monthly here. So our 7-day rolled. Our 7-day moving average rolled. Got price candles below it here that signal that downtrend all the way down to that 6K mark. Now we got 2 candles up here above that 7-day moving average. But this is a nasty drop candle. It's another nasty wick. So again, if this candle, this is way too early. We're only 2 days into the month, so we got lots of time on this current candle here. So we could either chop, or if this falls and crosses below that green 7-day moving average, let's see, what would that be? Below 8,400. Okay, so if we drop below 8,400 sometime by the end of this month, that is a game over for Bitcoin, and we might as well just drop. Oh shit, we could all the way. We could see that $4,000 mark. So we're kind of still. I want to say that we're still kind of in that bearish trend. I don't see a whole lot of strength, to be honest. I mean, the MACD just looks weak. We're hovering closer and closer to our moving averages confluence. I mean, you can see the clear uptrend and the clear spacing here of the 7-day moving average. Both of them are in clear uptrend. Look at the gap between the moving average, the 7-day and the 20-day from the 100-day. Lots of room. And now we came and tested it as support. And now we're kind of getting that confluence where all of the moving averages are going to come together again. So what could happen, and what I'm afraid of happening, is we stay under that 7-day moving average right here on this 5-day chart, for example. It don't really matter. It's, you know, a chart is a chart. And we stay under about 9,500, and this rolls more and crosses. You know, everybody and their mother was talking about, talking about that golden cross. So this is what I'm fearful of. If this rolls and we hold under 9,500, let's see, probably I give it by the end of this month, maybe. If we fail to close above 9,500 by the end of this month, and this rolls again, and we get another drop candle on the next 5-day candle here, which looks like it'll happen on the 6th. So by this weekend, we should have a new 5-day candle. And if this continues this downtrend and rolls, then our moving averages are going to cross. Looks like maybe April, which is fine. And if that crosses under, then I'm sorry, I hate to tell the bulls, but Bitcoin is going to be in a prolonged bear season. And then we'll do something like that probably. I don't think, and I hate to say it, I really don't think they're going to kill Bitcoin all the way down here below 3,000. I don't think they'll do that, because they'll pretty much just kill the entire existence of blockchain. Or not blockchain, but Bitcoin. There's too much money in it, too much hype. But I do believe that if we do cross under, we'll float around somewhere and around this 4K mark and make some kind of flat structure right here going into next year, and give blockchain more time to, I don't know, I guess live up to its hype and have working products and working exchanges and stuff, because there's still so much that is going on. There was a DDSO hack, and then there was that crap with Steam that Justin Sun apparently bought out or something, and now they're supposedly collusion with Binance, and there was some other, they were locking the voters' tokens or something. So it pointed to still so much centralization in an entire ecosystem that's supposed to be decentralized. So, I mean, that further just adds to the fuel that blockchain is nowhere near ready for prime time. And with that case, the more I zoom out and look at this, I mean, it really just looks all the more obvious. Oh, I meant to, let's look at the log real quick. Okay, so log kind of changes the trend lines a little bit. Okay, so this is the last, I don't know when, I don't know if there was a halving at some point here. I think there was in 2014, I think it was another one. But you can see the same similar trend line of making consistent higher or lower highs that we are making now. Granted, this, we're a little bit more skewed than we were so steep here, but we consistent lower highs, consistent lower highs. That trend line is a resistance until broken. So I don't know why everybody is just still, once again, getting so excited and calling bull season and moon and all of that stuff. See, I turned off log now. Now it messed up my trend line. Okay, so I'm not going to get bullish whatsoever. You know, if we kind of hold this 7,700 mark and then break up, or if we come all the way down over, you know, the rest of this year to this $4,000, $5,000 mark even and break that trend line. I'm not getting bullish at all on a macro level until this trend line is broken. And I would advise Twitter to do the same, because the more you just look at this and zoom out, this looks like a continuation of a downtrend. Okay, well that's Bitcoin. That's what I see for Bitcoin. So as far as where we are right now on a more micro level, we're still pretty well on track. Okay, so we're still gonna, looks like we're still gonna chop around, and looks like we might have just missed that upper target, but I don't think it's fully done yet. I think we may get another chance to hit it there. So still keeping an eye on that. This is chop though for you guys. Let's see, what kind of range is this? That's a 5% range. Yeah, I mean that's kind of choppy. So unless you're doing like lower time frames, 15-minute, 30-minute time frame scalps, this is not good. All right, let's go look at F. F, same thing. Just as we as charted for Bitcoin, we still 1, 2, 3 rejections off of a trend line. However, we are getting a little bit of a bull cross right here. Good solid hold of our support, but we are getting a little bit of a rejection here. I'm still expecting 245 to hit. Oh, this looks bad. F, though, on a macro level, let me go to weekly. I don't know why that's still in there. F Ethereum on a macro level actually kind of looks a lot more bullish than Bitcoin does. And I think I made this comment in chat that I think F might flip Bitcoin. Not so much as far as market cap, because there's vast differences between the two, but maybe in performance. Okay, so look at this here. So we did get some candle breaks just above that 100-day moving average. And our 7-day did not break below, but we still are trending up on that 7-day. So we haven't broken it yet. So I'd say if we got over this 100-day moving average and we tested 150 again and broke above it, I'd say that's a pretty good chance that F could actually reverse and, you know, just kind of snake its way up or whatever this year to that $300, $400 mark. But we got to keep up with the rejections, or pushes rather. And this is why I think F could still push bull. Look at the 2-week. So while all the high time frames, the macro levels on Bitcoin look like utter shit, F looks like it's getting a bull cross on the 2-week. So, I mean, this is still too early. This is the second, so this is a brand new 2-week candle. So we're not going to see another 2-week candle until the 16th. So still a lot can happen. We could still fall to that 198 mark. But this kind of looks like, so far, a continuation candle. So I'm not overly bearish yet on F. And look at our MACD. Let me zoom out here. So overall, look at our MACD. We're trending bull. Okay, unlike Bitcoin, what time frame was this? 2-week? Okay, so look at the difference between Bitcoin's MACD and Ethereum's MACD. So we're already over our neutral line here on the MACD for Bitcoin, and we look to be getting some bearish histograms and maybe trending back down. So this may just come back down and get that reset and then get a push. On the other hand, we are trending up as our MACD is snaking its way up, trying to cross that neutral line. So to me, that paints a bit of a better picture for a bullish case on Ethereum than it does for Bitcoin. So that's why I think it might be possible and plausible that Ethereum can flip Bitcoin and actually outperform. See, here's the 3-week. Not quite ready yet there either. But it looks like it's getting there. So ETH needs to get back up over here over 250 and close, and that would be much more of a better picture. If not, look at the 7-day here. I mean, it could range. We could chop right here and then get that push. At the same time, we can wait on this 100-day moving average to cross up, and ETH can pretty well just flag and hold the support and consolidate. So it's still a lot really kind of depends on the coronavirus scare, because that kind of killed every market out there across the globe, to include crypto. So I think if there's some good news on the coronavirus, the traditional stocks saw a pretty good pump today, pretty good rebound, as did Bitcoin. So if we continue to see some pretty decent news, it may not be that bad. If not, and this case worsens, let me just remove all of those. Oops, nope. This is kind of a bullish case. I mean, here we are on the daily. We got a very nice solid push here above our 100-day and 200-day moving average. And generally, if you look, look right here. Generally, it is a sign of a bullish continuation. You can see we're up all the way up here. We got the gap here, and we could be, somewhere right in this area as well. To make this go bearish again, though, of course, it would have to, test down in that 190 area that I had mentioned. We're looking at 192 or something for a support to flip. That would be the worst case. Or like I said, it could very well just chop where it is. Chop where it is right there. So I'm looking for this support right here to hold. I'm looking for ETH to stay above about 213, 215. If it fails there, then we're going to go to 192, 190 and see if we can hold there. I'd hate to see it wick all the way down to 180 right off of the 200-day moving average. However, that would be a pretty decent support resistance flip. So let's not get too excited. Our MACD has not gotten a reset yet. You can still see it snaking its way down on the daily. But again, it also could very well just kind of chop in place on price to get that reset it needs and still follow this here. So we could very well be entering a whole lot of chop on ETH. Okay, so let's look at the total market cap. So let's see how much the coronavirus wiped out. So the coronavirus wiped out about 22% of the entire crypto market cap. This looks like, in about a few weeks. So I don't know if this scare and the sell-off started to happen when it was, first reported and released in China. But it didn't get really bad until just a few days ago or last week. When it started to become a global epidemic here. So, okay, overall on a macro level, it really kind of looks like Bitcoin. I want to see us hold over this support line here. I want to see us flip this support line. And if that does, we still stand to lose about another 30 billion out of the market, which could do some pretty I mean, that's about another 13%. So that could do some damage to some altcoins. And we're going to look at the Bitcoin dominance next. So I want to see some money stay into the market and hold above this support zone and chop. And we could very well, again, if we chop, not much is really going to move for a couple weeks. So we may be looking at the middle towards the end of March, maybe beginning of April, before we start see some healthy movement back into the market in general. So really not much there. I just wanted to get a look at what we're doing as far as the total market cap. So it looks like from the start of the coronavirus scare up until now, looks like about 60 billion has left the crypto market. That's a pretty big hit. Dominance, on the other hand, though, looks pretty solid on high time frames. So we've seen before, altcoins can still pump even if there's money being drawn out of the market, because for all we know, it could just be money being moved out of Bitcoin, and we can have some lower time frame altcoin pumps. So what's really important is the dominance, and dominance is still overall trending bear. We still look to be in a downtrend. Got a nice little channel here. We could, and what I want is to see some further downside rejection, and I still want to see that lower 60 zone. I still want to see the lower 60s for dominance to test all the way down here, maybe to, I don't know, let's just call it 59 or so. So this would be a very good sign for altcoins. So if we look at weekly, I still got my alert set. I had an alert set right here off the top of these candles and this wick right here to catch that as support. So that was my cue to get out of altcoins. And before we saw the alt massacre, we were off by like 2 points. So that was very close to hitting my alert signal to signal getting out of altcoins. But it looks like dominance got front ran just by a little hair, and alt dumped about a day or two ahead of when I was expecting to. But overall, on a macro level, dominance is still in a downtrend. 2 weeks still looks pretty down. Look, got some candles, got nice candle structures below the 100-day moving average or 7-day moving average rolled. I mean, we're still in a downtrend on dominance, which is good sign for altcoins. Look at the 3-week. Crossed under bear. We got some wicks breaking below the 20-day moving average there, and our 7-day looks to be going to be trending down as well. So this is a 3-week, and this is okay. So we should see a new 3-week candle on dominance by Sunday. So I still want to see. Oops, I want this green. Still want to see that kind of just snake its way down. So nothing too exciting there. And this is why I wanted to just do a quick live stream, because there's not really a whole lot to update. I mean, it looks like we're just going to be hitting a lot of indecision, especially with the way the world markets are we're looking right now with the virus scare or whatever. So Pearl, damn it, this one kind of already started its little push. This was a new one that I saw catch some whale sniper volume. And I think I literally, before I started this live stream, looked at it back down here because it was back down at 334. So since this live stream, I've already missed 8% of that pump. Pearl looks really good, though. Okay, so let's go up for these candle bodies here. Okay, so you can see the bottom of the supports here. Very nice support base. Flipping this some resistance right here. You can see how this kind of cuts across the tops and bottoms of these candles, matching the bottoms of these over here. So really good SR flip or support resistance flip there. I mean, a nice little MACD curl up, RSI's curling up, and OBV's curling up, and I think Pearl still has a relatively low market cap. So that's a very nice flip, and I'm kind of salty right now that I missed that little pop right there, because I literally looked at it at around like 3:30 just a second ago before we started the stream. It's not too late to get in though. It looks like it's got some momentum, so it'd be good for some scalping. I want to see, if we can test up here near this previous high, and then maybe catch a pullback, and then catch another little pop. So Pearl looks good for some scalping. It's got some momentum. Now that is 70% from that support. So if we were to scalp it now, it's still 45%. To retest that high. So I'm going to put in 2 targets right here, some scalp targets. I better do it on this side. I don't know much about this thing fundamentally. I don't know the FAs on it or whatever. But TA-wise, from a chart-wise perspective, it looks pretty good. So we still got about 20% up to this first resistance right here. And then there's about 45-50% to reach that previous candle close right there. So Pearl looks good for some scalping. So please, by all means, scalp away and be careful doing it. Very nice pushback and solid looking uptrend right there. So Pearl looks nice. Now, I'm not going to run through all of the coins that we already have called and charted because there's really no update to them. They've all pretty well done nearly exactly as we had planned or exactly as we have charted. So ZIL, for example, still holding this support right here. KMD still doing its thing. But I wanted to just, I don't know, I guess get a brief run through of them. So broke the 200-day moving average there, broke it there. Now we got confluence right here of all of our moving averages coming in together. So again, come middle, maybe the end of March, last week of March, these should start to see some movement going, going towards the middle, the end of the month. So they're still in relatively good loading zones. Even ZIL, Raven right here, RVN. Not expecting monster pushes yet, so this could push, come back and push. MACD is not rounded out yet, so it's going to just kind of consolidate and it's going to get its push there. And again, this keeps bringing me back to Theta. So the last time Theta got these little tests right here, it ended up breaking upwards. Let's look at it. Actually, no. Let me do this. Loom too, by the way. Loom also looks really good since it randomly brought Loom up. So if we're looking at Loom right down here at the bottom, Loom also looks really good, but that's not what I wanted to show. Okay, so daily and daily. Okay, so if we were kind of trying to play this little matching game, if you will. Okay, so here's a hump, here's a nice push, here's a nice push, or a test pump, if you will. Here's another test pump and another one here. So this is a very similar structure. So what that would mean, if this follows the same path of Theta, is we're kind of like rounding out this bottom part right here. So again, going into the middle towards the end of the month, we should see that nice big push, the breakout point for Raven. So we should see that upper 520 mark or so. So if you're loading a bag for a swing trade, that's got a lot of momentum right there, a lot of potential, good 70%. And like Theta did not make a new low. It held its accumulation zone. It's held its pattern, as the same Raven has done too. Look all the way across. All of these are really, really holding that pattern and holding that support. And I'm sure within all of this, Bitcoin did some pretty wild things, but it didn't make a new low. So that's why I'm pretty confident in Raven this month. maybe a couple more weeks, 2 more weeks or so, we'll start to see a nice little uptrend and a surge, and basically do exactly what theta is, or what theta is doing here. Nice push, fall back and make a higher low and hold a new support right here over our 100-day moving average as that moves up. Well, I mean, you guys get the idea. So I got high hopes for Raven. I think it looks really good. This may need just a few more days here. Let's call it a week or two before that moves. So OGN, I think somebody asked me about OGN today. I'm going to hop over to this real quick. My puppy looks like he's about ready to wake up, so he's probably got to go outside. I don't see anything really too spectacular about OGN. I think the market cap is still relatively low. Our RSI looks to still be in a downtrend right here. OBV looks to still be in a downtrend. MACD looks like it's ready to curl over and die. Seven-day moving average. Look at it now. Okay, so this is what I always want you guys to see here. Okay, so again, I drill this through to you guys. Uptrend on the 7-day moving average. Price candles above it as support. Now look as the 7-day rolls and rounds out that top. Now we have price candles under it. Okay, so now the 7-day moving average is acting as resistance, and we should see a push down. So unless there's some kind of major surge overnight, I think OGN is going to be coming down, and I would be just simply putting down your support zones and knowing where those are. Okay, so I'd be on watch there for another test of 2700 and see if we could still hold over that 100-day moving average. So as this trends up, what we want to see for a bullish uptrend now is those two moving averages to meet and that 7-day to round back up and bounce off of it to consider a bull push. Otherwise, it's going to cross under that and it's going to just work its way back down. Algo was another one somebody asked me about. So the divergence was spot on. Look at that. 1, 2, 3 touches on the trend line. And you got 1, 2, 3, looks like maybe 4 or 5 on the RSI. But still overall looks pretty damn good to consider that a nice divergence. This was our support line we were looking for about here, about 3,900. We got just a wick below it at about 3,650 with a nice, what is that, 15% push? 18, almost 20%. Okay. So if we turn on the moving averages there, I think for an uptrend, it's not bad. Algo still looks to be holding an overall uptrend. We did break here above our confluence of the moving averages, so it still shows an uptrend. Now if we go to weekly, that's a pretty solid weekly right there. Okay, so our weekly 7-day moving average is above here, above our 20-day moving averages. And again, look, we got 1, 2, 3, 4 candles above the 7-day moving average as support. So we should see a nice solid continuation pattern and these candles to continue to hold up above that moving average. So we want to now see somewhere up there at about 7,000 to 7,200 for a weekly resistance on Algo. Still a pretty strong uptrend on the MACD. So, I mean, it's not really a whole lot of chart history to say there, guys. Not too much chart history, really. But the fact that this candle right here did almost touch the 7-day moving average and bounce back off of it on a weekly time frame is a pretty bullish push, or a pretty bullish signal there. So this would be our next target on a weekly level, up to about 7,700. A lot of good volume here, also great for scalping. You can see our hourly Hourly looks like it's going to be coming down for a reset. But it looks like we may only see about 4,000 as support. I hate this damn mouse. Okay, so look here. Look how that moving average, that 100-day moving average right there, look how it matches up with a support level right here on the bottoms of these candles and wicks. So you can use moving averages to really gauge where your support levels are as well, where your heavy support levels are. Your 100-day and your 200-day are really important and considered on any time frame to be heavy moving averages that you can use as support and resistances. And if they happen to match up with a heavy support zone like they'll pretty much always do, that's a pretty good indication of where you can maybe see some buys. And also where, okay, well, I got my 100-day here matching up with these support bottoms right here. If it breaks below now, breaks below 4,000, well, that's my stop loss area. Then it's going to trickle back down and probably make a new low. So I would consider that where your stop loss would be. Ooh, I'd hate to see that happen, though. No, I don't think so. I was going to say I'd hate to see it come down and do a backline test, but if it does that, then it's making a new low. I wouldn't touch it if it did that. So I would first look for your horizontal support there at about 4,000 Satoshi or so. You might catch a wick down to 3,900 or whatever. But algo looks good on a macro level so far. It looks pretty good for some scalping, as long as the daily holds up there. Good volume though for scalping. Wabi is another one that I'm really watching. Very pretty solid looking trend right there. Very nice support hold of this trend line here. Pretty damn awesome. Look at the MACD curling up, OPV curling up, and all that wonderful stuff. All the stuff that we like to see. I don't remember what time frame it was. Weekly looks good. Got a nice little bullish candle there and a bullish candle on the price as well as the MACD. I don't remember what time frame it was. That looked really awesome. 5-day. I think it was the 5-day. Look at the 5-day. Just ready to cross up bull there. Look at the curl up on that 7-day. So I think Wabi looks pretty good for a swing trade. But like everything else, if you guys are looking for swing trades, I would load really small bags. And we'll throw some targets in there for Wabi. Wabi actually kind of looks like WAN did back in August. Solid coin, solid project, solid fundamentals. I really like this candle right here. This is a pretty nice solid candle there on the 5-day chart. Daily looks pretty strong. So I think Wabi could be a good play to throw a swing bag trade into. But yeah, I really don't see across the board too much really popping off. I think the market is still overall in general shook by the coronavirus and everybody's scared to start pouring money back in the market. So I think across the board we might either see a lot of chop, but some great scalp opportunities. Yeah, come down, bitch. Let me get you. Let me reload you. We might see some good scalp opportunities. And this might be a half decent time to start opening some small swing trade bags. I wouldn't go too heavy yet until we start seeing a little bit more strength. But we're pretty well resting at the bottom on most all of these. So it wouldn't be bad to load some small swing trade bags, but keep the majority of your money either on the sideline or just for scalping those quick ins and outs. I would not expect any kind of really major move on pretty much anything, to be honest, because again, the market looks pretty shook across the board. Even traditional markets look pretty shook. Good relief bounce though on traditional markets, but I don't think that the scare of the coronavirus is fully out of the wind yet. So let's be on watch. Stick to scalping right now. If you're going to load some swing trade bags, do them small. We don't want to still be overexposed. So that's it, guys. I mean, I just wanted to go through, real quickly and check a few things out. So it looks like we may be entering mostly chop. I still think Bitcoin. This looks like chop. It looks like chop across the board, guys. Okay, well, that's it. I mean, if you guys got any requests or anything, I know there's a lot of altcoins out there, but if there's any requests that you guys want me to look at, shout them out in chat and tag me, and we'll give them a look. Thanks, guys.